It is probably one of the most mission critical pieces to the success of Rastegar. Okay. And more importantly, the era that I was raised in and a lot of other investors is this Bernie Madoff kind of era of people. And to me, being an attorney, I spoke with my father when I started the firm and basically said to him, you know, what if people, you're talking, you have exuberance and this passion, you're in a fancy suit, you have a shiny smile. What if people think that it's smoke and mirrors? And, it kind of hurt my feelings in the beginning. People are like, oh, well, are we sure this is okay? Are you sure you know what you're doing? And my dad kind of depersonalized it for me. He's like, hey, people are skeptical. They've been burned. How can you set up a risk control to ensure that their skepticism can be quelled? And that's where a third party fund administrator comes in, meaning at Rastegar, we don't touch any money at all. Meaning, when an investor, for an investor protection standpoint, there's a few things that you can do. One is don't touch money ever. So when an investor wires money into a deal, it goes into a third party fund administrator's escrow account. And that's exactly what it is in the sense that it's a third party. They don't have a vested interest in the deals. They're paid on a cost basis for processing a certain amount of documents, for a certain amount of quarterly reports. And so they're not in the profits of whatever the deal are, one. And then when the money comes in, an investor says, oh, let me look at this. The data rooms that they access, the pro formas that they access, the documents that they access are all managed by a third party. So that when the investor actually says, I want to invest in XYZ deal, the third party ensures that that is the deal that they're investing in. And then they also handle the accounting and they handle the books so that somebody that might, if something was going wrong or this, that, or the other, there's no possibility that somebody on the Rastegar side could then start to alter numbers. And it takes that, it makes me sleep better at night, first of all, because if someone says, oh, well, this is wrong with whatever, I can say, fuck you, go, don't call me. Like, I don't know. I don't even do any of that. I don't send money. I don't touch money. They follow what the documents say. And that just is what it is. And then beyond that, we have an auditor that then audits the financials of the third party admin. So that's my way of making sure that my admin is doing the right thing. So a lot of investors think that audits are for them. Audits are for me. So it's back to that tiered approach. We find the deals. We have a separate party look at the numbers. Then we have the broker look at the numbers. Then the investors go and they look at the investment packages and look at the deals, and they've seen these varying lenses of risk controls. Then the money comes in to a third party that follows a strict guideline of what the documents dictate of how money is spent, how expenses are reimbursed, or whatever those things are. And then at the end of the year, a third party auditor like Eisner Amper or KPMG or Deloitte goes in and then checks the work of the fund admin for me as the manager and for the investor. So those tiers of risk controls, at the very least, the investors in Rastegar know that what they think they're investing in, they are investing in. Hard stop. Does it guarantee it's going to go up? No, I'm not a psychic, but it does guarantee that the numbers that we assumed were ones that were based in reality. The way the documents are structured, the way quarterly reports are done, the way that distributions are made or not made are all in line with how the documents are supposed to be done. So the numbers are the numbers, and you don't have to take my word for it. That's kind of one of our competitive advantages, because for a firm of our size, this is what the Blackstones and the Carlyles and the KKRs, like this is what the huge institutions require. Like our investors are predominantly public pension funds and insurance companies. Okay, so yes, we have doctors and lawyers and professional athletes and celebrities, all these kind of whatever, but most of our money is institutional. And by having that, you can then check the diligence boxes for the institutions. This is what they want to see. So we designed this to be an institutional shop from day one, and it helped us get institutional capital in the first year. Very first year of the firm's history, we landed a huge public pension fund out of Louisiana. And so this was the differentiating factor. This is what's allowed us to grow, what's allowed us to attract some of the biggest banks in the world, some of the big, the right deals. But that is the real sauce. If I'm an investor looking at varying firms and all things are being equal in the deals, I want to make sure that my money's safe. And the only way you can really do that is to make sure someone without a vested interest, the lawyer in me, is watching the money, adhering to the documents, and then an auditor is watching them, and you have internal regulations built in. So you don't need to trust me, you can trust the process.